Okay, guys, so the first thing we're going to discuss are gaps, but I'm not going to go crazy, stupid, silly in detail, all right? Because what I ultimately want to get down to is scanning. And I said this earlier, but if you can't scan, you can't trade, period. I mean, sure, you can spend your whole life relying on somebody else to scan for you, but why would you want to do that, right? I mean, that's not what this is about. This business is about becoming a self-directed trader. Why? Because if you're a self-directed trader, nobody can ever take it away from you. Nobody. It's yours. You own it. Okay, so we look at this slide here. Take a look at this slide. And I want you to look at the bottom. All right, I want you to look at the bottom. These 6 things are questions you should be asking yourself before you look at every gap, or as you look at every gap. Okay? Where is the stock gapping to? Where is it gapping from? Is there some type of shock value to the gap? Is the stock gapping just enough to clear significant support resistance, or is it gapping excessively so as to ruin the risk to reward? Is the stock gapping into void or into resistance? Is the gap showing relative strength or relative weakness to the market? Typically makes them more potent. Sabir, I'll probably post this on YouTube later, okay? So you can probably check it out there potentially. So these are questions you need to be asking every single time you look at a gap. Every time you look at a gap, you need to be asking yourself those questions. Okay? The shock value and the relative strength are 2 of the most important things you need to be asking yourself. When it says, is there some type of shock value? Is the gap showing relative strength? What this means is, for example, okay, if the market were gapping down, say it was gapping down 1%, and you see a gap like this on OLED, over a wide range red bar, over a pivot, oh my gosh. I mean, I would need a towel to stop me from drooling. That's how nice this gap is. Why? It's nice because there's a tremendous amount of shock value. You're gapping over a prior pivot where sellers came in. How do we know this? Because of the topping tails and then the wide range red bar. So you're taking out all of these people, right? Some people, yes, I know it sounds crazy, but it actually happens. Some people actually thought about shorting this stock. I'm going to short it back to moving, and then you wake up, boom. So you have shock value here, okay? You're gapping over a pivot with room to move higher. And then imagine the market was gapping down on top of it. Imagine one more step. Imagine the market was gapping down significantly into support. So, right, imagine the market's down 4 days in a row at support, and it's gapping down right near support. And it's a big gap, like 1-2%. What's the market going to do? It's probably going to pop that day. And then you get a stock like this. Wow. Super nice. If you're not finding these, you're not scanning hard enough. Now, do they happen every single day, this nice of a gap? No. But this is why you always need to be scanning, right? We talked about that Glenn Gary, Glenn Ross, always be closing. Well, in trading, it's ABS. It's always be scanning. If you're not scanning, you're not finding these things. All right? So these are the types of gaps you need to be finding in the pre-market. Same over here. Look at this stock on RH. This was in a downtrend. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Below the moving average. Declining 200, declining 20 period moving average. Just lower highs and lower lows. And then 1, 2, 3, 4, 5 days down. A lot of people shorting this stock. How do those people feel this morning? So if you shorted this stock at $28, or not even, let's say you shorted it at 26, right? You're late to the party, and you wake up today and it gaps to 29. What choice do you have? To cover. And when you cover, you're buying the stock. And when you're buying the stock, you're pushing it higher. So buy to cover pushes this stock up. Right, so you're gapping over this pivot. The shock value here is ridiculous. Increased volume. Why do we want increased volume? Guys, volume equals commitment or the lack thereof. Okay, volume equals commitment or the lack thereof. So more volume equals more commitment. And let me tell you, despite all these bullshit internet charlatans out there, guys, you and I, all of us collectively, are not trading 3 million shares of OLED at $80 or 8 million shares of RH at $30. Okay? We are a piss drop in the bucket compared to a multi-billion-dollar hedge fund or an institutional bank. Okay? Why is that important? It's important because you don't want to get in front of those guys. You want to get behind those guys. Let them lead the path, and you just walk in the path they already laid for you. You walk in the path. You don't want to be in front of them. They'll mow you down, right? So when you look at that volume spike, that shows serious institutional commitment. I'm not interested in mom and pop commitment. I'm interested in institutional commitment. So you know this is going to likely happen all day. It's going to open at $74 and it's going to stay strong most of the day. And you can see that. It ended over 80 bucks. This one ended the day at the high, literally at the high. So I want that to be very, very important to you. When you see these gaps pre-market, you're looking for stocks that have above average volume, okay? Now, that doesn't mean you can't look at a stock that has 3, 4, 5,000 shares in the pre-market. You can do that. But when you see a stock that normally has 3,000 shares in the pre-market, but today it has 300,000 shares in the pre-market, what does that tell you? This is on everybody's radar. That's the stock I want to trade. Assuming it has a nice gap with shock value, over a pivot or under a pivot, with void and room to move. Okay? So you take a look at that. Now, let's move over. I'm going to just drag this across the screen and just maximize it. Give it a second. Now, the question everybody asks, and I get asked this question, I can't tell you how often, like a ridiculous amount of time. Like truly ridiculous. How do you find those gaps? How do you find them? You scan for them. So one, I just told you the criteria you're looking for, right? I gave you 5, 6 things to look for. Now I'm going to tell you where to look, okay? Dollar gainers and dollar losers. Now, I understand, and we talked about this a couple days ago, there are a lot of different scanning products out there. Trade Ideas, TC2000, what's the other one? I don't know. There's a ton of them. FinViz is out there. Free stock charts, big stock charts, your actual trading platform. I'm here to tell you that even though, for example, Trade Ideas is really, really good, and there's some other really good scanners out there, what your current platform has is probably good enough. Okay? Now, I use TradeStation, and TradeStation, which I'll show you here in a moment, has a lot of quality scans. I mean, a lot. And yet I only use one of them. Dollar gainers, dollar losers. So 2 of them. I use dollar gainers and dollar losers. Dollar gainers and dollar losers. The next question everybody asks is, why don't you use percentage gainers? Because I don't trade penny stocks. And if you use percentage gainers and percentage losers, you will almost always see the list littered with penny stocks. Now, again, there are some people that trade penny stocks routinely. I am not one of them. That's okay if you want to trade penny stocks. I'm just not a big penny stock fan. Okay? A lot of people pitching that horse shit out there. So I use dollar gainers and dollar losers. So in the pre-market, and this right here is a pre-market list. Now, this is not a recent list. This is old. But I want you to see something. When you look at the first page of this list, there's 42 stocks on this first page. Anything with 0 volume, I completely skip. Now, will I do a scan at like 9:20 right before the market opens to see if any one of those 0 volume stocks actually gains some volume? Yeah, but I do most of my scanning around 8:45 to 9 a.m. All right, it takes me about 5 or 10 minutes. 5 or 10 minutes to scan my gap list. The gap list is usually somewhere between 7 and 15 stocks. 10 to 12 is the sweet spot. Earnings season, you might see as many as 20. I like about a 10 stock gap list. 5 longs, 5 shorts. That's ideal. Okay. But what I want you to notice, PCLN, 100 shares, won't even look at it. UNP, 130 shares, won't even look at it. CEO, 5 shares, won't even look at it. Okay, EMES won't look at it. CMG won't look at it. AZO won't look at it. Guys, unless it has at least 2,000 shares, at least 2,000 shares, I won't look at it. So when you think about that, think about it. 42 stocks on this list. There are 1, 2, 3, 4, 5, 6, 7, 8, 9. I'll probably look at that. 10, 11, 12, 13, 14 stocks I'd actually look at. And here's another thing. I generally don't trade ETFs and ADRs. Generally. Now, will I trade the Qs and the SPYs occasionally? Yeah, but rarely, very rarely. So we went from 42 stocks down to 14, and then I'm not going to trade the ETF. So we can take out TNA, right? We can take out, I don't know if AZN is or not. We can take out, that's about it. 1. So I got that 42 down to 13. Now, how long do you think it's going to take to scan those? The answer is not very long. Okay? Wow, Goldman Sachs is ripping. We did a nice job, guys, making 800, 1,000 bucks on Goldman Sachs, but that thing is up about 7 to 1 right now. We got almost 2 to 1. It's up 7 to 1. Anyway, I'm really interested in the stocks, though, even though I will look at stocks like Google with 2,100 shares. Okay? I'm interested in the stocks that are doing volume that is unusually high. What would be unusually high? Tiffany doing 141,000 shares. This stock normally do about 3,000 to 5,000 shares in pre-market volume. Now you go, well, how do you know that? Well, I've been trading a long time, and you kind of get to know stocks, right? Netflix, 32,000. That's about average, all right? Not crazy. QIWI, that's a lot. 12,000's a lot. Amazon, that's not that much, okay? And you can see how old this is. Amazon was at 300 bucks, okay? Tesla, 61,000, that's a lot. TSL, 275,000, that's a lot. Those are going to be the ones I'm most interested in. Why? Because even though the other stocks are doing above 2,000 shares, and I will look at them, I want to see the stocks that are doing just, wow, crazy big volume, unusually high volume. And there's almost always a direct correlation between stocks that do unusually high pre-market volume and an unusually high trading range. So if Tiffany normally does $1, on this day it's going to do $3. It's going to do 2 to 3 times its average trading range. Why? Because there's institutional money behind it. Okay? Wow, Goldman is just ripping. So let's take a look at Tiffany. This is exactly what I look at when I scan. You're going to see it in a second. I'll go, wow, let's click on TIFF. 141,000. Oh, wow, look at the red bar yesterday. Red bar yesterday. TIFF is at 94.43. This is pre-market. The market has not opened yet. 94.43. It's gapping over a red bar and a pivot and over another pivot. This red line is drawn on purpose because that is the line that you would like to be above. Where is Tiffany gapping to? The line you'd like to be above. It's gapping right to it, like 94.50. It's gapping right to it. Right? It's gapping right to that area. Now, why is that important? Guys, it's important because it's gapping not only over a red bar with huge volume, but it's gapping over any semblance of a resistance area that might cause you some concern or might cause you some trouble, right? You don't want to gap below resistance, okay? Because when the stock opens, you got to get over that. You have to get through it. But when it gaps above it, awesome. Now, one other comment, and I'm not going to get too deep into this, so don't want to give the whole textbook away, right? On 100, or in this case, a $94 stock, this is a 7% gap. That's acceptable. If this was like a 20% gap, I wouldn't touch it. All right? If it's more than 10 to 15% and it's a high price stock, over $30, $40, $50, I won't touch it. Now, if it's a $5 or $7 stock and it's gapping 30%, I'll take a look at it. I'm not going to get into it any more than that right now because, again, I don't want to give all that stuff away out of the book. But you're gapping over a red bar. You're gapping over multiple pivots. Guys, has to be on your watch list. Has to be on your watch list. All right? End of discussion. So now let's take a quick look. Let's minimize these. All right. Now, this is live, right? This is my platform. What did I tell you I use? Dollar gainers. Now, I showed this to you guys the other day, but there's a ton of scans in here. There's a ton of scans in here. And I can even go down the volatility list, go down to this volatility list. Now you look at this. There's a massive amount of scans in here. You don't need them. Dollar gainers. Dollar losers. Give it a second. That's it. Those two scans. The only thing I do outside of gainers and losers is I go down and I look at NASDAQ and New York. After I go through this whole list, right, to get a few more down at the bottom, I will actually click on NASDAQ and New York, but I don't change the dollar gainers and dollar losers. Okay? So if we go back to gainers, all right, Goldman Sachs was one of the stocks that was on our gap list today. Okay? In fact, let's put out our gap list. All right? Amazon, Goldman Sachs, UAL, FDC, Adobe, NTNX, BAC, and TWO. Shorts, JWN, FISV, XLRN, BPM, and ADNT. Those were the stocks that were on the list. All right? So if we go, for example, Amazon. Why do we like Amazon? Well, Amazon, if we pull this up a little bigger, make it easier for you guys, was gapping over the 60-minute consolidation. The negative on Amazon was the flat 200, right? And that flat 200 is 1706. Where did Amazon stop today? 1705. You have to respect that stuff, right? You have to respect that. But it was gapping over a consolidation, okay? And this stock looked poised to go higher. It's worth putting on a list in a market that's gapping up, okay? Let's take a look. Why was Goldman Sachs on the list? Okay, I think this one's obvious to everybody. Okay, stock's been hammered. It's moving back up, and it has a 1, 2, 3, 4, 5, 6, 7-day consolidation over 180. It's gapped up. Okay, and we ended up trading this today. We made great money on it. Okay, but this is gapping over a nice, controlled consolidation with lots of room to move higher. It has to be on your list. Okay, now, unfortunately, you're seeing these with current volume. You're not seeing these with pre-market volume. Okay, but almost always stocks that have high pre-market volume also have high intraday volume, and that's what we want, guys. I don't want a stock on my gap list that's going to do normal volume. Why would you want that? How does that serve you? It really doesn't serve you at all, because if it has normal volume, it means there's a normal level of interest, and if there's a normal level of interest, how in the world are you going to do above average range? Well, you're probably not, right? You're probably not going to do above average range if it doesn't have above average volume. Now, guys, do stocks have news reports that come out once in a while and everything changes? Yeah, of course that happens. But pre-market, you're not going to know that, right? There's no way you could know that in the pre-market. Therefore, I stay away from most of those things, okay? So it's really important, guys. I'm going to kind of give you a little checklist here. One, before you even know what the stock looks like, make sure it has above average volume in the pre-market. Make sure the percentage gap is not too big, okay? And then after you realize, wow, this stock has really great volume, click on it, okay? See where it's gapping to. In this case, GS opened in the 185.50 to 186 area. And look at where is the next area of resistance. In this case, it's like 196 on Goldman Sachs. And go, wow, above average volume. Gap over a 6 or 7 day consolidation with lots of room to move higher. So far, great. So now it's on your gap list. See, we're not done yet, guys. So now the stock is actually on your gap list. Well, what do we do with it then? Well, after it's on your gap list, when you have the whole list put together, right? You put the whole list together. Then you use pre-market charts, which we talked about last week, okay? And there's a YouTube video on it as well, to gain an advantage to get an early entry, okay? So after you put your list together, you then go down to the pre-market and go, wow, how does this thing look in the pre-market? Can we gain an advantage to do that? All right? So, now these are old. You know what, guys? I want to bring up one more thing here. I'm going to try to Give me 1 second while I bring this up. All right. Here is an old, this is 2013, okay? I want you guys to see something. I guarantee you, if we check this particular day, all right? Guarantee you, and I'm just putting my reputation online because I haven't done it. 9913. 9913, that's when this came out, okay? I have some newer ones, I'll have to look. All right? We have Molex, 894,000 pre-market shares. Apple, 340,000 pre-market shares. ISIS, 81,000 pre-market shares. Let's skip down. DAL, 594,000 shares. Potash, which isn't around anymore, 200,000. I would wager, even Lululemon at 20, that these stocks did tremendous volume on those days, and I bet you they were probably pretty good patterns. In fact, let's pick a couple. Let's pick DAL because that's ridiculous volume on DAL, and then I'll pick a couple others. Let's go back. All right, I'm going to go back to that day. See if I can put this in here. Format symbol. What did I say? It was 9913. So put the date in. See if we can get back that far. 9/9/2013. Hopefully this data comes up. If it waits too long, I'll move to a daily. All right. Sometimes it takes a long time to update this. All right. We are DAL. Holy shit. Guys, and I just pulled that randomly off this list, okay? Randomly off this list. Give it a second to come up. And I said, huge volume is what you want. Take a look at that gap. Take a look at that gap. Over a wide range ribbon. Now take a look at the volume at the bottom. Is that not ridiculous, above average? 48 million shares that day. Are you kidding me? I just randomly pulled that out. I'll check ISIS that day. ISIS. Hopefully I can get that chart up. All right? So we'll check ISIS. Now I want you to look before I leave this though. DAL. Let's move it over so you guys can all see it. Let's get that picture back up. Where'd you go, picture? There you are. Okay. DAL. 509. This is pre-market. 4, 5, 6 years ago. Pre-market. Look at that gap. Shock value. Over a pivot. Room to 22. It ended at the high of the day and opened at the low of the day. That's how important pre-market volume is. Now, let's switch this. ISIS. Oh, I guess they are no longer in business. All right, well, we can't do that one. What's another really massive volume on that day? I guess let's try Apple. I don't know what Apple did that day. Okay? Apple, not a great day, an okay day, right? Apple had 340,000, which is not quite as much as the 600 that DL had. Gapping over a bottoming tail, and it put in a little doji day. So that one, not as great. It only put in a 60-cent range, and it ended up putting in average volume that day on Apple. Okay? Molex, probably some type of buyout or something. You can tell by the 30% and the 50%. Okay? The general consensus, guys, is, and we'll do MOS. Let's do MOS. Okay? Decent gap on MOS. All right, take a look at this, gapping out of a range with room to $45. Okay? Make sure you are looking at pre-market volume. Okay, make sure you're looking at pre-market. Here's another one. This is from 11/26/13. MW, Men's Warehouse, 495,000 shares. Joseph A. Banks, what does this look like to you? Probably some type of merger buyout, right? Tiffany, 149,000 shares that day. These are the ones you want to be looking. This is all pre-market, guys. All pre-market. So on that day, I'm going to take a look at Tiffany, for example. All right, and I'll take a look at, I don't know, one of these other stocks. And this was what, 11/26, did I say? Wow, look at the gap on TIFF. All right, 11, you can see the date right here, 11/26/13. And look at that right here. There's Tiffany, way above normal average volume. Look at this. Look at that gap, over a double top, over red bars. So you guys want to know how you scan in the morning. It's not that freaking hard. You literally go down the pre-market list, and anything with less than a couple thousand shares, you just don't even look at. So again, 42 stocks on this list. Let's see, I will look at, nope, that's an ETF. I won't look at that. Okay, 1, 2, 3, that's an ADR. So no, 2, 3, 4, probably look at sell, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13. And I bet you Joss B and Men's Warehouse is a merger or buyout. So again, 42 stocks, I'm going to look at 13. Now, eventually, I'm going to look at about 300 or 400 stocks. But you're on average looking at about 20 to 30% of them. So I'm really only looking at about 75 to 100 stocks a day. And it only takes about 5 minutes. You'll click, 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 click. Now, let's take a look at W Day. I don't know what it looks like, but let's take a look. Another nice gap, right? On W Day. Gapping over a red bar, multiple pivots, unfortunately gapping into some resistance. But a big gap, and look at the daily volume. Guys, the stock normally does 1 million, 2 million. That day it did 7.5 million shares. And I'm randomly pulling this up from 6 years ago, okay? And I can pick any other date you want. I'm just guaranteeing you, the stocks that do heavy pre-market volume are almost always decent gaps, and they always do crazy big volume. All right, let's pull up. Let's see here. Take that off. Hold on. I'm going to pull up. Where did that go? Oh, there it is. Give it a second. Losers. Okay. This is November 22nd, 2013. Intel, 2 million shares. Tesla, 29,000. Rost, 106,000. Let's take a look. Okay. Let's do Rost. What was that? 1122. Boom. Look at the gap. Huge gap. Look at the volume on that day. Normally it does like 4 or 5 million. That day it did 19 million shares. Probably a quick early scalp and then bounced back up. Okay. I'm sure it's the same if we did TFM. I'm sure it's the same if we did Intel. And how many did you have to look at out of 42? 1, 2, 3, 4, 5, 6. I mean, come on. So scanning one, you're actually not scanning 400 stocks. You're actually scanning about 100. After you look at those 300 or 400, the vast majority you won't even look at. Okay, the vast majority you won't even look at. Okay, and then after that, you now have your parameters. You're not going to look at stocks with less than 2,000 shares. Okay, let me move this back over. Sorry, guys. You're not going to look at stocks with less than 2,000 shares. You're going to make sure there's some type of shock value, some type of excessive volume, gapping over a red bar or under a green bar. I mean, you're going to make sure that what you're looking at is worthy of being looked at. Okay? And it shouldn't take you that long to do it. It really shouldn't take you that long. And now once you have that gap list, what are you going to do? You're going to look at the pre-market charts. Will you be right 100% of the time? Gosh, no. Of course not. But you don't need to be. You're going to be right 50 to 60% of the time. And that's all you need to be right. What is today? Is 16? 2019, man. Time flies. Okay? So I hope you guys got a better understanding of how to scan for gaps. Everybody thinks there's some secret sauce, extra science to this. There is not. Right? There's not. Okay? Today, for example, we looked at TWLO. All right, it's breaking out above this area. And why did we like it? Or why did I like it so much? Because of that pre-market, right? That pre-market consolidation right there. And ultimately what happened? It popped $1.75 and rolled over. So this one ended up being only a $50 winner today. That's it. I got in at 102 pre-market. It popped $1.75. And by the time it came back down, I got out at even. And thank goodness I did. Right? And thank goodness I did. Okay? So that is what you're going to do, guys, when you're looking to scan for stocks in the morning, 8:45 to 9:15. Honestly, it's better to scan slightly later because more stocks pop up. all right, more stocks pop up. Okay? So think about that for a second. The later in the day, closer to the market open, is when stocks really start popping up. I personally scan, like I said, 8:45 to 9 o'clock. If you want to scan at 9 to 9:15, I think that's the ideal time to do it. And it should not take you more than 15 minutes. All right? And again, in the beginning, it might take you 30. In the beginning. All right? But that's okay. You're learning. All right? That's fine. All right, guys. So let me shut this off. Hope you guys enjoyed that lesson on gaps and scan. To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.